Let's have a panel debate about disruption. Thank you to our excellent speakers. I'm now going to be joined on stage by 4 equally brilliant panelists. First of all, we have Mark Townsend, has been CEO of ReAssured since January 2024, a role that marks his first in the protection market, having previously worked in the personal lines and general insurance sector. Welcome, Mark. We have Itumeleng Kafala, an actuary who holds a postgraduate diploma in strategy and innovation and an MBA, both from Oxford. And she is a business development executive at Gen Re. We have Keren Mehta, the founder of Blueberry Life, a company reimagining insurance for people with chronic conditions like diabetes. He's also a medical doctor with a PhD in AI and risk prediction. He's on a mission to help people live longer and healthier lives. And Joanne Cole, the founder of Yavia, a technology platform with hyper-personalised, meaningful engagement and education to help transform how advisors deliver advice. Please welcome our panel. Okay, disruption. Mark, perhaps let's start with you. What do you think the right conditions are for a market to be disrupted? And do we have those conditions right now?
Good morning. I do think we have those conditions right now. To me, and I've only been in the life insurance market a couple of years. Prior to that, I was always within financial services, car insurance for a good amount of time. So going from sort of high street brokers to telephone brokers to internet and then comparison sites. Yeah, that market's been disrupted sort of pretty fundamentally at least a couple of times. And I do see similarities within the life market. Okay, the product is more complex, the sort of needs and the sort of motivation for a customer to be looking for life insurance is quite different to a mandatory product. But there's a significant number of people who would benefit from life insurance who aren't buying life insurance, which gives I think the first sort of indicator that it's not hitting the spot for a big enough proportion of customers or as big a proportion of customers as it could. I think the regulator can prompt disruption, and that can happen in markets. And again, so on the GI side, that did happen with GI pricing practices. It was a sort of particularly disruptive period of time, and probably in the round led to good. Some of the practices sort of needed disruption, frankly. The tech is getting there, so we're now talking about sort of virtual assistants, guided online journeys. We're talking about agentic commerce and websites that will interact with any kind of a bot that's sort of sent out in the morning to sort of find me some life insurance. So I do understand sort of why it hasn't, and Chris made some really good points, and that the impact upon underwriting results isn't going to be evident for sort of years, as opposed to in other verticals where it becomes evident within weeks or months. So I do understand why it hasn't, but I do think the conditions are right. There's a huge number of customers who would benefit from life insurance who aren't in the market currently, and I think we have to understand why.
Okay, so we encourage our panelists to talk amongst themselves, and we'll be taking questions from the floor, of course, throughout. Don't wait till the last minute, please, because that's what happens. You get 2 minutes left, and then 15 hands go up. So if you do have questions, there's a roving microphone, and please do make yourself known. We've also got questions submitted in advance from LinkedIn and from email and WhatsApp. As I say, if you've got a question, please do raise your hand. Taking that view on board, let's go to Keren and Joanne, because you both run what I think we can call innovative startups, disruptive startups that are trying to change how we do things. But I think it's fair to say also you've both experienced pros and cons. There are challenges, there are successes. Can you tell us about those? Perhaps start with Joanne.
Well, I suppose for me, and for those of you who know me here, it's always about the customer, and that's something that I have obviously founded a company based on providing engagement and educational tool for consumers. And that in itself I have found as being a challenge, because I feel it has fallen down the priority list in some ways as an innovative tool that has gone out to market. I get lots of, oh yeah, we really need this. This is amazing. Like, the consumers really need this. And then we fall down a list of priorities because we start from the inside out. And that's something I talk about a lot. You know, we always start from the inside of what we're doing and work it back to the consumer. My ethos is we start with the consumer, we start with the customer, we put them at the centre of what we do as an industry, and we work our way back in. And that has been, I suppose, my biggest innovation in what I've brought out, but also my biggest challenge, if that makes sense, because we do that falls down the priority list over time.
Good morning, everyone. Hi, can you hear me? Okay, great. For me personally, the main challenge has been the pace at which the industry moves. Quite frankly speaking, as an insurtech startup, we raise venture capital money, which gives us runway for 18 to 24 months. And within that time period, we have to make a significant amount of progress. The challenge is that when you are an insurtech, you can't come in and disrupt and do everything yourself. You have to partner with the reinsurers, with the fronting insurers, with the distributors, and these are all stakeholders that are of different sizes, which means that they have different priorities, which means that they have different timelines. And so the challenge really is, how do you get everyone aligned to move at a pace that allows us as a startup to innovate and make the progress that we need to then raise bigger rounds and grow as a business. The second challenge is also just finding people in the industry that are supportive of the proposition and the product, but also have the influence and the decision-making power to make things happen, essentially. You can think that you're speaking to the right person because they have the right title, they might have some decision-making power, you spend weeks and months speaking to them, but they're so busy they don't really have the time to actually push your project forward. And then months pass by and then you find the right person. So finding that right person is also a challenge. I think personally, we've been quite fortunate that we've had great partners that have moved very quickly with us and been very supportive of what we're building. But I do think that if the industry were to have a little bit more urgency and kind of prioritize what startups and insurtechs are doing, I think a huge amount of innovation could come about in the industry. And just zooming out, that's good for society, right? We're all trying to build better products that solve real problems for the end user. And like Phil said, the number of policies being sold over the past decade has been quite flat. So with better products that really solve customers' problems, there's an opportunity over here to do something that's very different.
Yeah, and if I can just reiterate that as well, as a tech startup, and that funding journey is so important for us. I don't think people really understand that. We come out with an idea, with a concept, innovate in this space. You do so much yourself for so long in a very complex space. You need to raise significant amount of funds to continue that journey. You need good investors, and you need to sell the vision to those investors, and you need the backing of an industry behind you, because that's so important. And that has been, many startups have failed in this industry, not because their concepts haven't been amazing, but because they haven't been backed by the industry. And I think it alludes to your point, Chris, is that the fear of being the first time mover. I mean, I have conversations now only coming to close that I've been in for 2.5, 3 years. It's a long time to keep a business running without actually getting any of those deals. That is absolutely, and I suppose that's what I talk about fighting to get on that priority list. It's been a learning curve for me, certainly.
Yeah, and the reality is, just to add to that, when you think about the work that needs to be done by our stakeholders or partners, it's not a lot of work. It's maybe a few hours, maybe a few days, maybe a few weeks. But it just needs to be prioritized. So, I would strongly encourage everyone in this room to kind of think about that. And, it might mean a few extra hours every week, but, I strongly believe it's worth it.
That said, I agree with you, Karan. I think as reinsurers and insurers, I think we can really up the pace. I think agility is important in order to foster innovation. And I fully support you on that one.
So I think what we're hearing there, I think we all know the analogy of the oil tanker. When an insurer wants to change direction, it's 12, 18 months to do so. And you've got these businesses have got 2 years funding, so 18 months is a long time. Now equally, we know that a lot of things are arguably on hold, but awaiting the FCA market review. To what extent do you think that might kickstart a lot of changes in this area? Whoever wants to go first.
Yeah, I think there's every chance. I mean, the FCA, within its sort of observations about the sector and within its aims for the market study, it specifically said that it wanted to understand why innovation hasn't been more prevalent and why change hasn't happened faster in this vertical at the same or similar rate as it has in others. I wish I knew what sort of path and what route that sort of market study output's likely to take and sort of what kind of changes it's going to have, but the FCA are normally very good for their word, and they have said that they want to stimulate more innovation within the sector to ensure customers are better served, and I believe them.
Sorry, Kevin, what was that question?
Whether the FCA market review, I think, is holding things up, but when that lands, do you think that might kickstart more innovation?
I think I'd say I've seen some insurers sort of pull back a bit while they wait for the outcome from that study. So I think perhaps there might be some more momentum, I think, after that study is concluded.
And let's talk about the role that reinsurance can play here. You know, I remember co-authoring a paper many years ago called Power to the People, and we kind of felt that ultimately most sort of power, if you like, in this industry sat with the reinsurers. But where do reinsurers sit on innovation and disruption? You know, are you enablers, passive observers?
I'd say we are innovators or enablers of innovation. And I'm actually not saying that because I work for a reinsurer, but actually my view was formed in my years working at Vodacom in South Africa, where I really got to see firsthand the value of having a reinsurer hold your hand through the entire process of launching a product. I kid you not, the chief actuary at Vodacom gave us, I think, 4 to 6 months to launch a new product. And I really think that wouldn't have been possible without the support of a insurance partner who gave us base rates quite quickly, who gave us off-the-shelf underwriting questions that we could use, who reviewed our pricing models and really was there throughout the entire process. So I'd say in that sense, I think we are enablers. But I think, again, to re-emphasize what Karen was saying, I think we can be a bit more agile. As Karen was saying, there's funding challenges, and I saw this in the previous insurance startup that I worked for. And so that pace of being able to support the people that we work with quite quickly, I think that's quite important.
Yeah, I mean, I would say categorically that Gen Re is obviously a very innovative reinsurer. Blueberry Life wouldn't be here if we went with Gen Re. And I know a lot of the other insurtechs, the MGAs at least, started off with Gen Re. So yeah, Gen Re does give you that shot at kind of taking your product out into the market. So yeah, thank you for that.
Other reinsurers are available. I am assured of that fact. Any questions so far from the room at all? There's one at the back there with a hand up. Thank you, Joe. Any more this end we need to come to next? It's Graham down the front.
Hi, it's Will Trump here. Mark, I was thinking as a behavioral scientist, I like to focus on what's not changing, not just what is changing. So yes, the disruptive forces, but what has been the same for hundreds of years is that it does need to be some kind of human persuasion for life insurance to be bought. It seems to be the way it's just done. I think maybe, what's the biggest innovation that's happened in pensions? It's been auto-enrollment. So could we think about those sorts of changes? Would they maybe be bigger disruptors if every employer had to provide life insurance or it became the default? Wouldn't that create more of a disruption in the market rather than necessarily thinking it's just new technology?
I think that's spot on. And as I said, regulation can be a driver for disruption. I think that would be a sort of a suboptimal outcome for all of us in the room if that's where it ended up and how it was mandated. It would be better than the current, and going back to Chris's point, better than nothing. But it would be better if we could just innovate and disrupt and change the current model to make it better suit customers and enable customers to tailor the right program for themselves, as opposed to it being that sort of one size fits all, which is unlikely to be as good. But yeah, that's a very legitimate route, and I could see how we could end up there.
Yeah, I completely agree. I mean, I think it would be incredible if it was mandatory for everyone to buy life insurance in the country. I think, France, certain European countries, it's mandatory to have health insurance, and that really helps with innovation. Car insurance as well. If you buy a car, you have to buy car insurance. So if that was the same with life insurance, that would have a huge positive impact on the sales in the market.
We've got Jason. Just hold on for the mic, Jason. Then we'll go to Graham down the front there.
In my talk after the coffee break, I was going to very briefly mention what happened in Australia in 2013, which is definitely relevant to what both Karen and Will have been saying. I wasn't planning on giving any detail, but if someone once asked me the question, what happened in Australia in 2013, I would be more than willing to briefly answer it.
Go on then.
But it was, you want me to tell you now? So essentially, it was compulsory to put money into a defined contribution pension, and the insurance companies went to the regulators and said, it'd be a good idea, wouldn't it, if some of this was used to buy risk benefits. So life insurance, lump sum TPD, and disability income. And the scheme liked this because they were getting paid commission, and it was on an opt-out basis. So almost similar to what Will's saying about everybody bought it, everybody was covered, and if you didn't want the cover, then you had to go online, fill in the form, send it to HR, blah, blah, blah. So you end up with 95% coverage, which means you can get a great deal with the insurers and the reinsurers, partly price, but more importantly with underwriting, or in most cases, not very much of it at all, to put it mildly. You then go back a year later, so everybody's covered for 100 grand. You go back a year later and you say, 100,000 is not very much, we should increase it to 200. And the scheme likes that because they get twice as much commission. The insurers and the reinsurers get twice as much new business. Aren't we clever lads? Gin and tonics all round. The mistake that they made was that the products were incredibly complicated. There was one of the schemes I did some work for where the members' booklet was over 100 pages long.
Oh, wow.
And I couldn't understand when the damn thing was going to pay out and when it wasn't. So what chance has a nurse or a teacher in Queensland got? And because it was all sort of mixed up within the pension contributions, then people didn't know when they were covered and when they weren't. So essentially what was happening was the claim event was happening and they weren't claiming. It all came home to roost in 2013 when the no-win, no-fee lawyers got involved, and the industry lost literally billions of dollars. And it was because of the fact that people didn't know when they were covered and when they weren't.
Well, let's take that
Yeah.
and go to Graham, and then we'll take both points to the panel.
Still writing out my question. So Graham Simons, Health and Protection. I was at the ABI's. The ABI had an event before the Mayfield Review came out. Charlie Mayfield spoke, and he challenged insurers to think of risk pooling, solutions for SMEs to access health and wellbeing benefits. This did appear in the Mayfield Review. I wondered what the panel's thoughts are on developing these sorts of solutions for particularly group income protection, because I asked Charlie specifically about that issue. He said it is part of the solution. What I'm thinking of is Nest-type schemes already exist for pensions. Is this possible for health and protection benefits, and how could insurers create such solutions to innovate and disrupt, particularly with SMEs, because they want to do the right thing by their customers, but they don't necessarily have the capacity or can do it at scale?
Does anyone want to take that question?
I can take the question. I think is a question asking whether there's income protection coverage for SMEs. Is that kind of...
It's more like with things like Nest, so you auto-enroll into a larger scheme, risk pooling for pensions, because that already exists, is that possible within this space, but for protection health benefits? So the collective sort of collective sort of health and protection benefits that you see perhaps on the continent, Scandinavia, places like that, is that possible to roll out in the UK, do you think? Can insurers in this country innovate to create those sorts of solutions?
I think that's a bit of a tricky one, because I don't think I fully understand the business model or how it would work. But I mean, the fundamentals of insurance are risk pooling, so I'm sure there is some creativity around that and something that could work.
So I think we're talking about the pros and cons of insuring large groups with relatively limited underwriting. A question I wanted to ask of the panel, perhaps again starting with Karen and with Joanne, is if you were starting over again, given the lessons you've learned in the last couple of years, are there any things that you would do differently that could inform this room and beyond in the years ahead?
There is and there isn't. I think, you know, we are an industry that moves slowly, and, you know, we have lots of reasons why that happens. For me, I could have accelerated moving into the larger deals quicker. I was an advisor, worked for a protection advisor, saw a gap in education and engagement for clients, probably alludes to that gentleman's point down there about clients not understanding their cover. That was my passion. It continues to be my passion. And I went out to the advisor community, and we call them day-to-day sales, and built that up. As a startup, that's a hard journey, but I learnt on that journey exactly what advisors need and want, and what consumers need and want on that journey. And I call that my proof of concept, so that now as I move into those larger deals, I am able to do that at scale. And I think that has been a journey for me and a learning. It's been a learning exercise. I think I could have accelerated quicker, and instead of maybe going at the pace of the industry, if that makes sense.
Yeah, so if I flip that question slightly, and the question was, what advice would I give to a founder if they were trying to innovate or disrupt in the insurance industry? It would be patience, because of what I said before, perseverance, so obviously don't give up, and because it's so challenging and there's so many obstacles to overcome, it creates a competitive advantage if you are able to kind of break through those, and then eventually you will build something that's valuable and durable. But for perseverance, you need passion. So only approach the industry, try and innovate and disrupt if you're truly passionate about the problem that you're solving. Otherwise, yeah, there's absolutely no way you're going to survive. And then finally, persuasion. I think when I started many years ago, I thought with my credentials, with the great idea that I had, if I build an amazing product, great AI technology with the great design, and I pitched it to the stakeholders, they would, want to really partner with me. That's not the case. The insurance industry, like every other industry, is very much relationship driven. So you have to be, in these rooms. You have to be meeting people, show the human side of you as a founder and as a team, and build those relationships over a long period of time, which compound and allow you to build kind of valuable partnerships.
If I can also add to that, get good funders, because you will need them.
Yeah.
Because it's a long journey.
So I have a question. Would you, if you were to kind of go back a few years, would you go on this journey, or would you take another route?
Absolutely. So I think it's, the fact that I'm so obsessed and dedicated to what I'm building is a gift and a curse.
Yeah.
So it's a curse because I can't do anything else, and it is challenging, and but it's a gift because it just gives me clarity, and I know that I will continue on this path for several years, maybe decades to come.
Okay, I'm going to throw two questions together before we come back out to the floor for any further questions. One is around AI. We've not talked too much about AI yet. An email from my IFA this week saying, is AI a bubble or not? And my very informed IFA, managing all my money, kind of said probably. Neither yes nor no. But also around what are we seeing globally? So if anyone can take either question. So one, what disruption are we seeing globally that could impact us here? And secondly, what impact do we think AI is going to make in the relatively short term? I don't think we know where we'll be in 5 years' time, but the next sort of 12, 18 months.
Yeah, I think from a global point of view, I think the recent McKinsey report into agentic commerce and that when you sort of get up in the morning, if you think you might need some life insurance, you'll tell Siri or Alexa or somebody to go and find me some life insurance, and it will interact with us, and it will interact with all of our sort of sites, and it will present back with a number of options and pros and cons and features and benefits, exclusions. So that agentic commerce, I think, is probably more realistic as a source of disruption, source of innovation for our market than sort of generative AI and voice, I think. But apart from that, everything is sort of changing sort of behind the scenes, whether it's automating the back office, automating reconciliations within the accounts teams, automating sort of internal processes. I think the coaching and training and sort of helping advisors and agents to be sort of as informed and to be sort of mindful of what worked for a customer, like the customer that you're talking to, what was powerful for the sort of, what you've missed. So if you've not given the right disclosures, if you've not had the right sort of conversations about data retention and all those things, so I think it's a massive opportunity for us to improve. And it may be that source of disruption. It could be agentic AI, it could be generative AI, but it's something that we're certainly embracing, and it's a big area of investment. And really, the last couple of years have been spent sort of sorting out our data repository, our data environment, because that is where all the AI learning, where those sort of large language models are going to be put to work.
Kevin, I think just to also add on, I think AI is a thing. I don't think it's something that we should see as outside of the industry. At Gen Re, we are using it a lot just with underwriting, so underwriting summarization tools. So that's a big part where we're seeing that play out. I do think probably in the next few years, we might see AI somehow influencing how we distribute insurance policies. I do think as distributors here in the room, we need to think about how we can kind of work with AI in a sense to help us distribute insurance products more effectively. But yeah, I don't think we can see it as an outside thing at all.
Yeah, I think AI, it's a big word, even though it's just 2 letters, but basically there's machine learning, which has been around for decades, and then there's generative AI, which has really taken off because of the invention of ChatGPT. I think insurance is the perfect problem or use case for machine learning, because ultimately at the crux of insurance, you're trying to understand the risk of something bad or an adverse event occurring. And so if you can use sophisticated machine learning models, which is what I did in my PhD with big amounts of data, if it's from new data sources like wearables or your phone or traditional electronic healthcare records, that you can build much better underwriting models that can more accurately predict the risk and price premiums. And that's what we're trying to do in the space of the underserved segments or impaired lives of people with pre-existing conditions. And then I think with generative AI, you can build really great value-added services. So you can use it to build like an AI health co-pilot that can engage with the customer through voice and give very personalized recommendations. So that's also something that we're building to, similar to Vitality, but focus on people with pre-existing conditions. So yeah, I think AI is here, and it's here to actually reinvent and innovate across the entire insurance value chain.
Well, firstly, I think we did a great job having 30 minutes in the conversation without mentioning AI, so that was a good start. But yeah, I think AI is here. We certainly look globally to other markets about how they're using AI to support the agents, whether it's an AI agent model, and would work with some companies on that. I think, again, I take it back to the advisor and the community. How can we use AI to support that journey? Who in this room this morning has already used some form of AI to get here? I would imagine, well, I'm going to say most of us, I certainly have. And consumers are used to that, and I think it is the pace and direction of change that we have to be very careful at. I stood on the stage 2 years ago talking about the Amazon experience and Jeff Bezos, and I think it has gone so much beyond that in the last 9 months that we're in a totally different era, and it will be vitally important moving forward. We can't ignore it.
Absolutely. I've used AI this morning. It was to write that bingo joke. To be fair, it didn't have the best of briefs in a rush. The two things spring to mind. For those of you that follow the trade press, you would have seen there are businesses now that have AI advice that has passed all CII financial planning exams, and it has passed them with a higher average than the UK Human IFA. So is there any advisors in the room who think that AI advice is not going to come along soon? It's here. It's already here. The challenge, I think, will be the engagement part. You can have digital advice here, customers over here. How do you join the two together? And you made a quick point about wearables. At our Protect Z event, it was really interesting because they're kind of turning against the wearables, it seemed. We did a bit of a show of hands, and most people in the room didn't have the smartwatch. And they kind of said, yeah, we're always on with that gadget or that app or that piece of social media. And the watch was just a bit of a stretch too far now, which was really interesting feedback. Any questions in the room? We have about 5 minutes to go, I think. There's a question here from Mr. Philo.
Thanks, everyone. A very simple question. I'd just like to ask the panel, do you think insurance is too cheap in the UK? I mean, does that stifle disruption and innovation, the cost of acquisition, servicing, distribution of products? Do you think insurance is too cheap? We tend to find that there's a race to the bottom in terms of price, but I'd be interested in the panel's views on that.
I mean, I'll go first. So at least for our customer segment, which is individuals with pre-existing conditions such as diabetes, etc., no, it's not too cheap. It's actually too expensive. And now consumers' preferences are to buy Netflix subscriptions or other kind of products where they get immediate value. So justifying buying a long-term life insurance policy is quite difficult, and they find it too expensive. Now, the reason it's too expensive from our perspective is because of underwriting. So the excess mortality risk or the loading that's applied to the base rate is a bit too high, and that's due to traditional underwriting methods. So we are building, machine learning technology that can predict much more precise loadings, which will allow the price to come down. But yeah, at least with our demographic, we see that the price is actually too expensive.
So I think also to answer the question, I don't think price hinders innovation, and actually innovation tends to bring price down. If you look at other markets, say with Uber, for example, which tends to be cheaper than, say, the black cab. So I don't think price would be a barrier to kind of restricting innovation.
Yeah, so it's a question that sounds close to the competition rules. I'm neither insurer nor IFA, so I can say what I think, which is yes, I do, and I told the regulator, I think we do. There's another question there, Joe?
Sorry, clearly the more money you're going to make out of the project, the more likely to obviously invest in the technology and the infrastructure that needs support it.
Yeah, I think that's spot on. That's what I was thinking. So one of the conditions for disruption is sort of excess profits or super profits within a market, and yeah, that's something that happens rarely, whether it's sort of across our value chain, the insurers, the distributors. So yeah, I think there is a point in that. On the other hand, those inefficiencies within the model, the duplication, the sort of numbers of sort of mouths at the trough, for want of a better phrase, they also give the potential for disruption and a sort of rationalised value chain.
Yeah.
The size and the profitability of the buyout market for insurers and reinsurers, and ask yourself where you put your money.
Yeah.
Look, Joe, that point about engagement and wearables, how do you think we can bridge that gap between the technology and the human being?
I'm just going to go back to a very basic point. It just brought something to mind that I have dealt with a consumer recently who, I mean, nobody knows what I do where I live. I'm in insurance, that's all they know. So she asked me about our policies, and she was paying up on £400 a month for life and critical illness across her family. Obviously, they have a big mortgage, and I think we just have to look very realistically at that. She hadn't a clue what she was insured for. At the very basic, she didn't know what she was insured for. She didn't know what she had available to her. She didn't know how to access it, as you say, app soup. Phil, there was an app here, there was a portal there. She couldn't find her policies. Actually through conversation, and I'm not an advisor, I sent her back to her advisor. She had now circumstances had changed. She's now self-employed, and she'd no income protection. There's a gap that we talk about, the protection gap and the engagement that we've missed out. Before we even mention wearables, there's just that basic engagement gap that in this industry where we are not communicating effectively with our customers. And I think, alluding to your point, sometimes when we get to claim stage, we do you wrote in your article last week, we let consumers down, and it might only be one or two because we do a great job all round. But when we do let them down, then that is a really big problem for the industry, and it's through lack of education and engagement with that client. And I think if we can master that, then the wearables and everything else sort of feed into that afterwards, when we get them to understand what they have at a very basic level.
Graham, did you have a question? A quick one? Just hold on for the microphone, Graham.
Is protection too important to be automated as a conversation? Because some advisors doing a fantastic job of asking the questions that a machine will never ask, and thinking particularly things like mental health and suicide prevention and that sort of thing. It's that question that gets asked right at the end of a conversation or spotting a gap that a human being can do, because it's a human conversation as opposed to being automated.
I think
Is it too important to be automated, or is there a flip question, which is it too important not to be automated?
Equally.
I think it has to be a combination. I think it has to be digital with a human touch, to answer your question.
I agree.
Yeah, I agree. I think it needs to be hybrid. We see from our data, and we deal with people that have chronic illnesses every single day, is that once they start the journey online, so we have a D2C non-advised customer journey, and as soon as they start the journey online, and then if they do have to speak to a human, there's an 80% drop-off. So, these individuals want to share their medical data either with medical professionals or automatically into the journey. And I think the future is where every individual will have their patient data in an app on their phone. And so if we can build a product or a journey that can automatically pull that data via an API and then use that for automated underwriting, with the support of a human, obviously, I think that's the future.
Yeah, I think the way to look at it, I think for a lot of customers, the process is really quite simple, and we do complicate it, but it is really on the face of it quite simple. And I think that the automation for those customers with straightforward needs enables us to spend much more time on that sort of more complicated case, whether it's the mental health case, whether it's the inheritance tax planning, whether it's something related to an SME or a business. And I think that's going to be the big benefit for all customers, is more time to spend on those complex cases, because the simple cases cease to touch the sides.
Okay, we're going to end our final minute on, if we can, I'm going to surprise everyone now, a one-word answer. We can go from left to right, starting with you, Joe. Quite simply, are we disruptable, yes or no?
Yes.
No. we can innovate. We can innovate. So we have to partner with everyone and innovate.
So it's a 1-1 draw so far.
I'd say yes, but I'd say not as easily as other markets, as in we're not as easily disruptable as other markets because of regulation and some of the things we've kind of already spoken about.
Yes.
There you go. I think that's a 3-1. Please put your hands together for our panel.